Hey everyone, I'm going to do a risk analysis for Duolingo stock and highlight three of the most important risks that investors should know about this learning technology business. I'm also going to share with you my discounted cash flow valuation for Duolingo, let you know what I calculated for a fair value, and update my buy recommendation for the stock, let you know if I think it's a buy, hold, or a sell, even after accounting for these three big risks that we're going to talk about.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the biggest risks that Duolingo faces right now is slowing user growth. The company reported some decelerating user metrics, and recent trends indicate there's a slowdown in its daily active user and monthly active user numbers. That could indicate that it's reaching some market saturation and it's having difficulty acquiring new users. And of course, if you're having difficulty acquiring new users, one of the problems could be increasing acquisition costs. So as the early stage, easier to achieve customer growth numbers starts to taper off, Duolingo may face higher customer acquisition costs if it wants to grow beyond this point. So the early stages, maybe it found it easier to grow, and now during these middle stages of its growth opportunity, it may have to spend a little more time, energy, and effort and money to acquire new customers. The second risk I'm going to highlight is disruption from artificial intelligence. Of course, it's facing emerging AI competition with these new artificial intelligence large language models that could offer personalized learning experiences that challenge Duolingo's offerings, and they can do it more cheaply. Well, they offer it more cheaply. I shouldn't say they will do it more cheaply because these large language models are facing very high cost, but they're able to continue growing because investors keep giving these companies money without requiring these companies to generate profitability. So they are being well funded and investing aggressively for growth. There's also some signs that there's reduced demand for traditional language learning as AI advances because you can pick and choose the things you need to learn when you need to learn it. For example, if you take a trip to Paris and you're in a French restaurant and you want to order something on the menu, you quickly pull up your large language model and ask for a quick translation of the specific thing that you want to know in that moment. Whereas before the advancements of AI, people ahead of their trip to France may spend several months trying to learn French. And so that structural change in AI advancement could change demand for language learning in some way. And so these pressures on monetization for free and low-cost AI alternatives could undermine Duolingo's subscription-based revenue model. And then staying ahead in the AI integration demands significant investment in research and development from Duolingo's standpoint to try and keep up with AI advancements. Because these large language models and these companies are well funded, investing billions of dollars in their growth, Duolingo may need to increase their investments in research and development so that their offerings are differentiated against what people see in these AI large language models. So that gives people a reason to go to Duolingo instead of going to one of these apps. All right, lastly, there are some reputational risks and ethical challenges for Duolingo. The company has to comply with local regulations. It's led to some criticism and some question about the company's commitment to inclusivity. They have had some past incidents like the exposure of data through a public API that highlights its vulnerabilities in data protection. And then the last two, I think, are more relevant in that they're getting critiqued for having some gamification features of language learning the app's use of these passive-aggressive notifications and gamified elements has been criticized for potentially causing user anxiety and detracting from effective learning. And it's pressuring people to continue opening the app, that streak where it says, oh, you don't want to lose your 17-day streak of language learning. All of those have been criticized by some for being kind of pushy, and you can understand the passive aggressive nature of the company's tactics to try and keep users engaged. So despite the risks, let's look at if the business is worth buying at the current valuation. And according to my calculated fair value for Duolingo stock, I think the business is worth $321.50 today. The current market price is $309. So in my opinion, at $309, the business is fairly valued, because even though it's $12 below my intrinsic value calculation, I like to apply a margin of safety. And so with this close of proximity of a calculation of fair value to current market price, I like to say the business is fair valued. And given the current market environment and Duolingo's position, it hasn't really established itself as an excellent company, which are the ones that I like to buy when they're trading at fair valuations. And then when I look at Duolingo's forward price to earnings ratio, it looks expensive on that metric, even though it looks fairly valued on my DCF metric. So all things considered, the risks, the valuation, the current macroeconomic environment, do I think Duolingo stock is a buy, hold, or a sell? I think Duolingo stock is a hold at current prices. Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.